Hello ladies and gentlemen, welcome to the Bull Runners channel. In this video, I'm actually going to be sharing a live call recording that I host every single Tuesday for Altcoin Pro University members. This is strictly a call for those members. A lot of these members have questions. A lot of them have been on many of the calls, but we always have new people joining in. So for some people, this might be one of the most valuable videos you watch. And yes, it's going to be a longer one, but I can assure you, you are going to learn a ton about how to look at a chart, how to understand technical analysis, and how to keep things simple, because at the end of the day, there are tons of indicators out there. There are tons of tools and resources and voices, and you can listen to just about anyone. But if you know the fundamentals of how to look at a chart, which is what I'm going to show you in this video, then ultimately you're probably going to make the right decisions about what to do with your portfolio. You can actually block out the news, the noise, a bunch of talking heads, and focus solely on price action and the chart, which will tell you everything you need to know before you either buy or sell. So yes, this is going to be an extremely valuable video. It's going to be long. Be sure to set aside all distractions, and let's get into this video. Welcome to the Tuesday technical analysis call. It is October 21st, 2025, and today we're going to keep it pretty straightforward and simple. It is quite interesting to see how the market is responding to just the current macro environment, and using basically Trump's tweets to trade. They're trading into these events, and I personally think, because they're still bullish and there's no reason for anyone not to be. I mean, there's always going to be a reason, right? When you talk about the news cycle, but in terms of actual investors and major market makers or funds, uh, they're still buying. And, I could point to different things. Let's just go to that macro. Many people would argue, not, yeah, let's do this one, not MV2. M2 money supply is consistently growing, while at the same time, right, we're sitting at a 425 basis points or 4.25% on interest rates, which we are expected to cut on the 29th. When I say expected, we've been talking about this, but the Fed is going to be quote unquote flying blind into this next interest rate decision on the 29th. And so because of that, it would play into their best interest to simply just lower the interest rate by, at least 25 basis points, which would be a tailwind for the entire market, not just crypto, but the entire market. And because, yes, although, we're seeing, let's look at this, unemployment's, starting to rise for the first time, going all the way back to the last time we were at 4% was in 2021, or 4.3%, I should say, in terms of unemployment. And virtually every single time we started trending up for new highs on unemployment, that trend would continue until the market had bottomed. Unemployment usually lagged 6 to 8 months. I'd have to look at the data again, don't want to. Um, and this would top off while the stock market and crypto at this point had already, well, not in '03, right? But like in the prior couple of scenarios that we've seen, which in this case, really 2020 is the very first time because crypto was so new here. But the crypto market trading very similarly or correlated to the stock market bottom, and then it would recover and into their recovery well above that bottom, sometimes upwards of, in crypto, hundreds of percent, but even in the stock market, many percents, percentage points, I should say. I don't know, ticks. um, Here, let's just show you real quick, okay? Because I think this is important to look at. So let's come into that, maybe that weekly time frame on the stock market. And so look at, like, right here. Let me put a line here, okay? Uh, and then at the same time, I actually have to make sure that they're same intervals. Okay, cool. So let's make sure that we're on the same intervals here. There we are. Do you see that right there? How on the 28th of '09, the stock market had already bottomed. And if I really increase the size of this guy, come on, where is it? There used to be a little thing where you could, oh, they changed it. The stock market had bottomed while unemployment had peaked and had already recovered how many points? About 50%, right? So, and that was over a period of months. I don't know how long, we'd have to look. About a third of a year, right? So, arguably 9 months. Uh, that's a long period of time, but the stock market had already, it basically, the stock market is forward looking, right? Unemployment is backward looking. So I think looking at unemployment is just a true indicator of the actual health of the economy, even though it's lagging data. Which means whenever we start to see this trend, get prepared for something else to come. Then you combine that, and we've been talking about this over and over and over again, probably on the channel, not just myself. I haven't really watched everyone else's videos all the time. But gold just ripping for some insane new all-time highs. That's an indicator of other, banks, whether they're central banks, local banks, or just major investors all around the world, from every walk of life, investing in buying into not just the trends. Some people chase these strong trends. Other people, the reason that this can grow this much, though, as a what, 20 plus $1 trillion asset, I don't even know how much it's sitting at now. We'd have to look. It's insane. And the reason that it can do this is because so much money is flowing into gold, as a hedge against, some risk with the US dollar and where we're at. So when you see unemployment like that, gold like this, chances are something is severely wrong. And I think these are leading indicators, is my point. So I don't know if we're gonna get like a 2026 bull run. Personally, at this point, my opinion has to change a little. Just seeing how crazy things are getting and how the stock market continues to rally from a weekly time frame. Let's go ahead and actually just get off of this here. How do I remove? There we are. Okay. Let's come back to this and let's just focus on the S&P so we can move into crypto. Um, the S&P is just holding up very well, and even on that daily time frame when Trump tweeted China tariffs, I think a lot of players in the market, right, who haven't gone insolvent, who are still making money in a market like this, take that, and whether they have trading bots and algorithms that are trading for them, which find tweets like that and then immediately do, the thing. So, for example, if Trump tweets something negative according to tariffs, their bots or they themselves watching the market will sell immediately, and then they'll short with a bit of leverage. Then what happens is into the dump and dip, they will actually start to buy that dip into new all-time highs. And so I think that's what's been occurring now that people know that Trump is not serious when it comes to tariffs. He uses them as a tool for leverage. Which is why this occurred in that same period of time. I also think there were a lot of major institutional players who were looking at crypto, saying it's easier to dump. They slammed on the leverage button. And that was it. And the bottom fell out, teaching crypto investors that we simply aren't big enough or liquid enough, which is, again, a little bit dangerous. And when you really think about it, this is a nasty dump for the S&P. I mean, this really showed up in crypto, right? Bitcoin dumped over 20% while the S&P, and this is how important liquidity is, 2.8%. I mean, think about that. Bitcoin, a multi-trillion dollar asset, was able to dump 20% in a single day, where the S&P is sitting at 10 times smaller than that. So, and even the S&P can get trashed based on this, which means leverage is dangerous unless you're really going to do good risk management. And we've talked about this over and over and over again, but for those of you guys who are newer on the call, I hope that's something that you really think about moving forward, because at any moment in time you can get really wrecked and then you lose all of your money into the end of this bull market scenario. I personally am of the opinion now, with things as they are, that we're probably gonna, yeah, get some new all-time highs into the end of the year. I don't see any reason to be like afraid right now. I'd be a little bit more cautious with leverage. I would have taken, more of a levered play right here at this local bottom. And more so just focus on surviving through the end of the year with an actual portfolio that grows. Like, that's my personal take. It doesn't mean you have to do that. That's just where I'm at, and I think it's smart. Now, in the case of, this dump, notice how the S&P was supported virtually exactly at what, 6,500, right? With some wicks, you could argue maybe down to 65.60 to 65.90. That was a pretty solid dip buying opportunity. You toss, let's do a 20 EMA on there and let's just see if it's been holding up well or playing that range at all. So virtually every single time the S&P has dumped down to that 20 EMA has been a pretty good dip buying opportunity, including below in a strong uptrend. How do we know it's an uptrend? A series of higher highs and higher lows. Now this is, quite a period of time going all the way back to April of this year. So this market truly is resilient. This is something that I've considered, consistently been talking about. And I think that's going to show up in assets like crypto, even with volatility, right? So looking at let's go ahead and go to that weekly time frame. And you can see even on a weekly time frame, the 20 EMA has been a pretty good range to play for Bitcoin. Anytime you're slightly below it into a strong uptrend, not a bad time to accumulate and buy. Just understand that the further we move along into this bull trend, going all the way back to November of 2022, you're adding to risk here, whereas it was less risky to add to your position here or here. Okay. By the way, over here, we kind of knew the trend had changed directionally. That's just the reality. And the reason is because this was the prior high. So for those of you guys who are, newer or like, how do you know? Let me turn that EMA off and just focus on the chart. Okay. Start new. I don't like how they do that anymore. Okay, this is textbook downtrend, right? We have a series of what? Lower highs, lower lows. This is an all-time high up here. Cool, like that. All-time high right up here, okay? We have a local low between the two highs, okay? A new high, a new higher low right here. Notice how this low is still higher than this low. It is possible that this thing could have trended up. And instead, bear trap, this is now the high. And this candle right here was your indicator that now we are officially going lower. Look at where we broke right here. So let me go ahead and remove all those drawings yet again and just put this line right here. Notice I'm on a weekly time frame. So this is like very, confirmed. And then this is one of those things where just knowing that this is how far you have to wait to know that the trend has changed is kind of insane, because look at this look at this volatility. That's a 47% drop before you're like, this is a confirmed downtrend. Which is why, again, it's so important to have really extreme clean risk management and stop losses. When you're wrong, it's okay to be wrong. You can be wrong 10 times in a row. That's fine. As long as you're wrong really small. And when you're right big. And by the way, in crypto, you can be right really big. A break above 11,900, you would have sat in this move all the way up to bare minimum 41. So you can be right really big as long as you're wrong small. But if you're wrong the same size, you're wrong big, you're screwed. Period. Because crypto's just not there yet. It's too small of a market. So this is where you would have confirmed that you're in a downtrend. So now we have a series of what? Officially, we know where our all-time high is. We know where our next high is. We know where our next high is. We know where our next high is. This is a series of lower highs. This is our series of lows between those two highs. So how do you know where the low is? You could argue here and here. We can get really, minuscule and dive in, but we don't need to. We're just focusing on the overall trend. In this scenario, right? This is the lowest low between these two highs. This is the lowest low between these two highs, right? You could even argue here and here, but again, not point. So now we know that this is a textbook downtrend. I like to bet with the trend more often than not when I see a breakdown. And I like to bet with the trend on the upside when I see a breakout. Every now and then I'll dip buy. I'm a little bit better at that than I am at short selling, but still, it's like, play your game, play it well, practice good risk management. You'll not only survive, you'll make a lot of money at some point in time. You only need to do that 3 to 4 times, 5 times max in your lifetime to make a ton of money, and use that to just live on interest. Okay. And by the way, it might require blowing up once or twice or 3 times in order for you to finally say, that's it, I've had it. I'm either going to stick with it or I'm going to quit. And so this is our downtrend. Where do we know now? Okay, so just looking at this thing, let's assume we don't know what's going to happen next. Okay, where is our high of the last prior high of this entire range? The last high of the range here, $21,400 ish, right? Give or take, depending on the exchange, liquidity, blah, blah, blah. Where's our low? Awesome. Do I want to immediately buy when it starts breaking above $17,000? Maybe. Now, there are ways to approach it. Me personally, knowing how Bitcoin operates now over almost a decade of being in this market, it's one of these things where it's like anytime I see Bitcoin down 50 plus percent, I'm dip buying all the time as an investment strategy. But generally speaking, let's just assume this is a random crypto. You're investing in it from a swing trade perspective. Okay, so you're trading moves and all that jazz. Where would I buy this? Do I buy it just because it broke out here, right? From 17,000 for a new local high. Let's play it out for a sec. Right here. Even if you did, by the way, let's say you're day trading this thing right there. This breakout right here. Notice what occurred immediately after this breakdown right here. I should have a stop right below the candle breakout right here. So if you want to be really tight, if you want to be less tight on it, just below the lows right here. Me personally, at this point, with how crypto is, and honestly, just how crappy most are and how poorly they trade, when they break out, they immediately break down, you get wrecked. What's the point of wasting your time? Why put a stop loss lower when you can keep it tighter? Because the moment we break out, this should actually follow through or at least support here and continue moving. If it breaks right back down below the low of the breakout candle, in other words, right here, which is where I'd actually put my stop at this moment in time, I'm out. I don't need to be in. The moment this thing's trading down right to 17, I'm out. Why stay in it? So you entered right here, you're out here. Hopefully you didn't enter with 100% of your portfolio. And now look, 5% loss, 4.3% on 15 to 20% of your portfolio. That's not that much. I can do this 10 times and I'll still have enough money to eventually win big. So this is why it's so important to have good risk management. This right here is a bear trap. Or better yet, even if it's not, what does that look like to you? Right? A lower high. If we get a lower low, that's it. Now, it doesn't have to be, but let's just play it out. We don't know. This was at the actual all time low now. We know that. But notice how we didn't break for a new low now. Notice how the market not only turned over, so in other words, you have a bit of volatility here, a little bit of a fake out, uncertainty in the market, bears and bulls fighting. Then what occurs? We get officially. So this is like jumping the gun. If you really wanted the actual like breakout super confirmation, it's up here. But this alone should have told you something, right? Maybe like a break. You could argue the wick here doesn't matter. You know, it's subjective in that respect. You know, we're on a daily time frame. I'll just go based on the close. So let's just remove that now. Now we know that this is the low. Where did this low come in? Higher. See that? Is this low higher than these lows? Answer yes. Okay, cool. Where's the high between these two lows? Here. Interesting. Where is the next high coming in? 18? Interesting. Okay, this might actually be the start to a new trend. Where, you know, you could argue, well, I want real confirmation, right? So maybe you wait for a break above 21. Someone says that's too long. People get impatient. This is, you know, small price action on a daily. It's also important to note, and this is something that I've learned over the years. Look at how tight and small these candles are. This is why it's important to learn price action. Do you guys see how tight? Here, let me remove all of these stupid lines and focus on the price action now. Every now and then you get these huge dumps, right? This was actually the collapse of FTX. And notice how small this is, relatively speaking, from this high down to here, 25.7% on the actual close versus Terra Luna. Let's just look. Terra Luna into, I believe, I don't know which one of these is like Terra Luna, but basically into the Russia-Ukraine deal. From the top of that to the close is 50%. From the bot to the bottom is like 56. So 52. Let's just go with a 53 average. Okay. So massive collapse of FTX, one of the biggest collapses. And notice how small and tight this is, this dump, relative to over here. Again, this is indicative of too many players with weak hands in the markets. You know, people who are probably wrong, leverage in the system. Whenever you get a bigger, in my opinion, this was equally as big of an event, but way smaller on the price action. That should be an indicator to you, right? Maybe there's less selling and leverage in the system now. up here, we don't even know why this occurred. I can't even remember. I just remember when it happened, and I was like, this is crazy. um, let's see here. Usually leverage at the first couple ones are usually leverage, and probably institutional players made enough money and now they're just looking to get out, right? And then adding to their shorts to really get that move going. Who really knows? Um, we'll put it this way. This right here is smaller and tighter. Notice that the candles in these ranges up here are just on average bigger. There's bigger moves in between up and down. And then look at how tight we get into this range over here. Do you see how tight all of these candles are? Look at how tight this little range is right here. Sometimes in between a little pump and a little dump, generally speaking, look at how tight these candles are. This is an indicator that there's just a lot less activity. Like this thing might be done selling. So this is where you want to start to look for the directional change of a trend. I can show you the exact same thing in prior bear markets. Massive capitulation. Look how tight the candles are down here. Look at the directional change in the trend. Textbook. Lowest low. No new highs. Equal highs. Interesting. Higher low. Where's the next high? Well, we don't have one yet. Here. Ah, where's the lowest low between these two highs? Here. This right here is your major confirmation. When you combine the price action, the trend, and then volume, look at the explosion in volume. Confirmation. This breakout is legit. And worst case scenario, you're still wrong. Sometimes it happens. Tight risk management. It's hard to like what the hardest thing is when you lose in your brain, when you don't practice your disciplines, right? When you don't set stops, and when you like being right. I don't need to be right anymore. As much as I like it, I don't need to be right anymore. Ask yourself, how's that gone in marriage and relationships when you need to be right? Those are the worst types of people to be around. Like, if you don't humble yourself, the market will, and you just don't belong in the market. So you got to be humble when you approach these things. You don't need to be right. You just need to be disciplined. And over when you learn the basics of these skills, it's not like impossible to succeed in markets, even in crypto, which is very volatile. So now, again, and look at how different, look at massive moves, tight moves, directional change in the trend. Let's just remove the drawing. Explosion in volume. Daily, it's like doubling. That's good. Whenever you see a 50% or 100% gain in volume on a breakout high, that's a good thing. So sometimes it pays, okay, well, you're like, I'm not too confident. Maybe this, because here's why, sometimes I don't like to trade these, even if you have to be patient. Let's just replay it to here. Okay. Is it possible that this is the low? This is the prior high, right? So we know where the major low of the range is, period. We know where that is. By the way, you can trade this stuff from a daily, a daily time, like a daily perspective, a day trading perspective, a little bit of leverage, play around, whatever, learn, lose, win, but it doesn't matter. Where I'm like a big investor is like, look, right here, that is the prior high before the actual all-time low. We don't have a new low yet. Is it possible that even right here, yeah, and that would be what? A new lower high. That happens too. So where I'm actually very confident that this trend is officially done to the downside is here. But more often than not, just throwing this out there, whenever Bitcoin dumps, and you'll notice that, as it matures, the bottoms, look at this, 70% plus, 77 in this case. Here it was even 68. Anything below, in my opinion, this next cycle, 60%, I'm actually just adding to my position across the board. Because every single cycle, this dump gets smaller and smaller and smaller as there's more demand, institutional adoption, stronger hands. We have the ETFs, like it's a maturing asset class. We have regulation. It's at a point now where the dumps are going to be smaller into bear markets, which means anything under 60%. but I'm just teaching you the fundamentals of how to know when this thing is done trending to the downside. Does that make sense? So again, there's multiple ways to approach it, but the trend is your friend, and this could be very much possible and potential. And it's possible that Bitcoin could have dumped back down to 14, or could have double bottomed here at 15.5. Like nobody knows, right? Uh, Only liars are in the markets during the good times and out of the markets during bad times. But look at this explosion in volume. So this is your little first indicator. And notice that now we have this line right here. And look at where we popped off and stopped for a bit. We hung out for 1 day, 2 days, 3 days, 4 days. Play it out one more time. 5 days, six, seven. 1 week, and look at that right there. Volume into that move expanded. This right here, this one breakout candle is your indicator that this trend is now new. It's changed. The trend is different. Why? We now have our very first high, our prior high. We have our low. Where's the next high? Here. This high is higher than this high, and we have a low. And you could even argue just, multiple lows between here where we have a higher low. Now, this isn't textbook, right? Technically, it's this right here. This is the low between these two highs. We have a new higher high. So that's a good thing. Now, every now and then on your first break, you're going to get volatility where it goes like this. That's fine. Play it wisely. It happens, which is, natural in markets. Things that you don't want to happen, happen. It's called life. But right here, if you added this position, let's just say right here, and a stop loss right here, that's a pretty big, percentage difference, right? Let's say you actually add on that day and it does dump 8 to 9%. Can you afford to do that 3 times in a row? Just 3 times in a row. Okay, let's say 9%, just getting wrong and you're unlucky 3 times, right? That's a 27% loss. In order to recover a 27% loss, let's just go down to like 27. And then from there, it would require you to be right 37%. So the more you take losses, the harder it is to get back to break even. You're compounding the effort or the requirement for you to get back to break even. If you take and some of y'all, including myself, like I'm not talking just about y'all, I've made all of these mistakes. Some of y'all are sitting through 40% dumps on an asset, and that requires 68% to get back to break even ish. It's just hard. Like it's not, and in as this market matures, it's gonna become more and more difficult. That's the reality. You're racing against the clock at this point, so you don't want to compound your errors or losses anymore. You need to practice good risk management. But a 9% loss, right, is fine as long as you're not all in right away, which means just add to a pilot buy, if you will. And I think that's a good way to start. So I hope that helps. And maybe just a good refresher for y'all. That is officially the start of a new trend. We know where the bottom was. That was actually the bottom, even with some volatility in between. I'm gonna X that out, and we're gonna focus on where we're at right now. You tell me, are we in a major uptrend or a downtrend? Still an uptrend, right? We have some nasty volatility. No one can predict this. Nobody. Okay. Break for a new high. I mean, this is just a nasty pattern. Impossible to trade. There are people who are able to do it, but not everyone does it all the time. Even the best traders are getting wrecked on stuff like this. So you guys know. Um, it's just they're good at, I'll put it this way, getting wrecked is different, right? Even the best traders are taking losses on this, and that is okay, but they don't get wrecked because they have good risk management and they have disciplines in place. But what the hell kind of pattern is this? Right? We have what they call in trading, from a technical analysis standpoint, a megaphone pattern. These patterns are the worst. Widening out on both ends equals more volatility. More volatility sucks. Like it's impossible to trade unless you're like watching every like probably 5 minute charts and just trading small moves throughout. Like, by the way, day traders love volatility. That's great. Me personally, from a swing trade perspective and an investment perspective, this is not fun. Um, Pumps hard, breaks for a new high, dumps hard, breaks for a new low, back in the range. Like that's not easy to trade. This right here sucks. But I will say, then you have to focus on what's the actual trend. The trend is up. We have a new high. We've had our major low between these two highs. We had a new low right here. However, we're holding up nicely on a long term, going long term back to December of 2024, almost a year now, support right here. So as long as we stay above 106 to 107 on Bitcoin and we trade in this range, we're happy. I don't care if we reach 118 by the end of the year. I don't care if we break out for new highs by the end of the year. I don't know what's going to happen. Nobody actually does. Ignore everyone online. Okay? Everyone has their theory. And yes, we're going to share what those theories are. But you have to have your own theory. That's why you're in this class. Like you need to work hard to look at the chart and say, what do I think of it? Without all of the talk and chatter. Personally, looking at what I see this thing is holding up well. We've had some volatility. If I come down to the hourly time frame, again, look at this nasty. What kind of these are insane patterns. Like I actually think bigger traders are shorting the crap out of it or just trying to scare as many people out to accumulate as much as possible here because I do think new all-time highs are in coming into the end of the year. I really do believe that. But this again, what is going on? I don't know, but here's what I know. We're holding up well. We actually, here, let me admit him. We're holding up well. Let me get a little tighter in there because it's pretty nasty, right? And as long as this trend remains up, notice how low, high, that's fine. Okay. Even if you go to that daily, what do you see here, right? We don't really see any breakdowns below these two wicks now. And we actually see, even with a red candle that's a slightly bearish engulfing candle, what are we seeing? A long, strong wick to the upside of 114. So this new high is an indicator that maybe it's a good time to accumulate and buy a little. Now, with good risk management, personally, I'm not holding this position below 102. And on some exchanges, do your math, right? But like that's important to note because if you're dip buying here or adding to a position here, maybe if you're an investor and you're like, I have a good long-term outlook into the end of the year, it would really suck if this was the actual all-time high, right? And so I personally like buying into breakouts. This is just such a long range that it could take a while. It's okay to add to a position here, but just understand that this is a higher probability of a breakdown right now than it is a higher probability of a breakout. Why? Simple. We're trading at the bottom of the range. That's it. So, from my personal perspective, yes, we're still in an uptrend. Yes, this is a nasty market. Yes, I think we're due for a market correction, probably, if not by April of this next year. Maybe we continue rallying through the end of the year, but I think the market's ready to cool off personally. And I wasn't of that opinion, a month ago. Like I thought maybe we'd see a 2026 all the way through. My opinion's changed now just watching what's occurring with gold and all these other assets. But I think we have a last leg in us. And if we don't, we'll know soon because Bitcoin's going to break down for some new lows. That's the reality. And if Bitcoin does, everything is going to follow. XRP needs to hold here, period. Notice how, last week I was talking about, I think we started right here. Yep. We rallied really hard off that low and immediately started selling right back into this range. Every time I've seen crazy wicks like this, I almost have always seen some, into the dip buying and then the initial pump, another retrace into new local lows, candle close, and now we're seeing a nice little potential bear trap. So right here, see how break down below, take out the lows of this range right here, close, break back into the range. We're not seeing a new trend though. So this is important to note, right? Highest high, lower high, flat, in terms of the bottoms. Finally, new low, lower highs. This isn't really positive for XRP, even with all the great news you hear, okay? Which means XRP is really going to have to hold here. And this is a strong support right here, especially if you come out to, let's say, that weekly time frame. Look at this, right? Between 245 down to 230. That's going to be a pretty strong range. Just understand it can hang out here for a couple weeks, a month. Who says it can't? So in this case, this is going to have to hold up for XRP. And if it doesn't, and let's say Bitcoin starts to break down and it breaks for a new low below 215, this thing's done for the market for the year, in my opinion. So just keep that in mind. It really needs to hold this range. Currently lagging, I think, quite a few different cryptos. But I think it's getting close to that bottom. And this is a price that we've been talking about for quite some time, right? Between 240 down to 235. From the VRVP perspective, notice that this right here is our support, right? Look at the amount of volume for going all the way back to November of 2024, almost a year again. Uh, the amount of trade volume in this range. So if it fails to hold here, and with this lower high on the weekly time frame at 255, an inside green candle, that's not really great. Doesn't mean it can't hold. It means I personally, looking at this, I don't want to add to this. That's the reality. Notice where Bitcoin is holding up. It had a fake breakdown, break back into its support range right here, right at its lows. So Bitcoin somewhere in this range right here. XRP is trading in new lows and is failing to break for a new local high, even on a wick. So that is not indicative of any strength whatsoever relative to, we'll just show you a Bitcoin. Now, Bitcoin doesn't look better from the wick perspective, but notice where it's holding up. If I could put a line there. At the range lows. XRP broke below range lows. So relatively, Bitcoin looks stronger. It's also a safer asset to hold and buy, right? Again, off of its actual all-time high, this is important to note, it dumped 18% from that high. So I think I was wrong on 20. Um, and then XRP, off of its all-time high, this is a liquidity thing. That's all it is. 56%. So you're carrying more risk just playing with an XRP. Carrying more risk in an uncertain environment is what fools do. Okay. And I'm not saying, like you're a fool for buying certain assets. That's just how you should think if you want to survive in markets like crypto. And I've been around long enough, bro. I've been burned long enough. Like you have to learn, again, my opinion might be different. It doesn't matter. But over time, the market will burn you enough that where you realize, okay, I need to be better at risk management and not holding more risk into uncertain environments. So let's hop into a few things. So that's where we're at. Ethereum down as well, but it has far more support right here at 39. So if Ethereum can break back above 39, I'm okay. Right now, I'm also not adding to risk on an Ethereum. Okay. That's where I'm at for the week. So notice that the wick is being sold off into in virtually all major assets. Okay. Play that as you will. Let's dive into a few questions and then we'll get off because I want to get off at a decent time today. So I think Bitcoin right now is the only thing that I'd be looking at. If we're talking what looks best from a weekly perspective down to a daily perspective. Um, I'm happier, if Ethereum can hold here look at this. Lower highs, interesting. Lowest low, higher low. Whereas XRP was down here on that low and close. This is indicative of relative strength. So the point I'm trying to make is this. It's not perfect. There is no perfect deal. I would like to see a break back above 41 realistically, and then for confirmation, at least 42 back into this healthy range up here if I'm touching Ethereum. And that's just a better place to add to a position because here you're adding to risk. Sure, you could get lucky buying the bottom, right? Buying now, but if it breaks down, you just took a loss where you could have just increased your odds of making money by waiting for the right time to enter. Okay, let's answer a few questions. The tokens I keep on Coinbase, I can set stop loss in Rabby or Phantom Trust Wallet. Yeah, so I believe you can do that with jup.ag, jup.ag. They offer like I think limit orders and stuff. I haven't played with DeFi in a while, but I used to quite a bit, and um, you can likely do it there. So look up jup.ag, and if you're like I forget that, or you just come over here to Coin Market Cap and you can look up the actual website. So this is the best way. By the way, just because it's on CoinMarketCap and has a website doesn't mean that it's actually a legit project or a crypto or isn't a scam. They list a lot of things. It's just the biggest things they usually verify pretty well. So Jupiter right here is number 67 market cap. It's a massive DeFi exchange, okay, which is an aggregator. It's pretty big. So the point I'm trying to make is when you actually click for their website right here, and you connect your wallet, you can see that you actually can do all sorts of different things. You can trigger a buy, a limit, all that stuff. So they're really good, and I'm almost positive they offer those types of functionalities and features. And you just find that website right here by going to Jupiter, looking up Jupiter. It's jup.ag. Okay, and I think there's others. You guys can ask Yoni inside. Like they're more on top of the DeFi stuff than I am. Um, Hyperliquid, yeah, for sure. Hyperliquid's great. From a trading perspective, right? I wouldn't actually touch the token at all right now. Let's look at that real quick. And this is something I was telling you guys last week and the team, or the week before. Whenever I see this rolling over type situation, I stay away. And then a lower high, a lower low. This is a downtrend. And it's possible that even with good revenues, they continue to dump. I've seen this over and over. We saw it with Celestia a while ago. Let's look at Tia. At one point in time, look at this chart. Beautiful. I was holding through this. I can't. This is one of those ones I actually got really lucky and I actually sold the top, like the majority of my portfolio, and kind of just didn't enter again. It was great. Um, that happens every now and then. You make a lot of money. Look at this beautiful chart. This at this point in time, here even, everyone was like, this is the future of crypto and layer twos and technology and blah blah blah. Okay, look, lower high, lower low, lower high. You know what's happened since $19, $20? It's sitting at $1. That is possible for hype. Someone says that's not possible because it's got this and that and that and that fundamental. No, just remember it can happen to hype. It happened to Tia. It can happen to any crypto. It's happened to the best cryptos I've seen over and over and over again. So, and by the way, this team really cooked their token. I don't think that'll happen to a hype personally this bad, but it is possible. And because it is possible, just know that the trend has officially changed on a hype. Notice how weak hype is and how far down it is relative to Bitcoin from its high. Okay? Play that risk properly. So if there's a Q&A, okay, could you please let me know whether the TA applies the same to all financial instruments, Forex, stocks, futures, crypto? Yes, it does. To the extent that you can always look at price action, I think volume is important as long as it's legit. And we're not going to go and dive into every little detail around volume. Um, if you just know how to look at a trend and volume, and price action and use horizontal supports and resistances, I think that works really especially well with equities or stocks and crypto. I think it works pretty well with commodities. I think the problem with commodities is you have to be more fundamentally focused, right? Because commodities, things can change globally where someone says we're shutting off the supply of oil tomorrow. Or like, for example, the weather can actually affect the opinions of investors for wheat. So commodities are a little bit more tricky. You have to be slightly more fundamentally focused. It doesn't mean you still don't look at the chart. If it's in a long-term downtrend, why touch it? Oh, but I heard someone said it's going to be a good year for this. I don't care. But understand that if you're trading that, you probably have to be more focused fundamentally. Um, that's important to note. As for Forex and other, a few other markets, they're a little bit more volatile here and there. They're a little bit more prone to big banks playing with them in certain ways that are more volatile. Like, just they're slightly different in terms of how they trade. But that doesn't mean you can't use everything you're learning here for every market. Once you know this stuff, you can go into any market and do well because you learn its personality. It's kind of like, if you're dating, new people. Like there's certain things that I've noticed that the majority of women kind of value. That doesn't mean they all value the exact same thing. It doesn't mean they don't have their own personalities. Everyone's got their own personality, but I've learned sometimes it's best to just hold your tongue in certain ways with women, right? Like don't be a guy. Like you can be a guy, but like and they love men, but you don't want to be the guy that you are with your boys, right? So like it's just discernment, it's wisdom. It's like over time you learn maybe I should just say, you can leave a nice compliment. And so for me, I found that every single market has its own personality. Every crypto has its own personality. Once you kind of know that market, you can really refine your craft and play it well. And I think I don't know if that was a good example, but that's what I've learned. I personally stay away from Forex now. I don't like the brokers. I think stocks and crypto are great. Futures, I mean, futures can be in any asset, right? So whether they're perpetual or, more option, type stuff. Let's see here. How does Trump want crypto to pump is the question wait, how much does Trump? I don't know. I don't think he actually, I mean, he likes it because he makes money with it. I don't think Trump really cares whether crypto pumps or not. That guy's got a brand that he can do whatever he wants with. Um, I genuinely don't know. All I know is that Trump knows less about crypto than we do. And why would he know more? Like he just talks about it, and in the way that he talks, you know that like he is pro innovation, so that's good. I think he would like crypto pump if he's got a lot of personal assets in crypto, and a lot of his sons are all involved in crypto. So why wouldn't he have an incentive to make crypto do well and make us the crypto capital? Is that his highest priority? I don't think so. But I think he's went to a lot of the people in the administration said this is a high priority. You guys get it done, and I think that's good. So I'm a huge fan of it. Personally, I'm less of a fan of crypto now than I was when I in 2016. That's just a reality. Um, Chainlink very weak right now, even with all that positive news. It's struggling. Let's look, and then we will. World Liberty Financial will look at it. I don't really care. If it looks good, it looks good. If it doesn't, it doesn't. I am so agnostic anymore. I don't care what the name is or who's behind it. I care how the token's actually doing. Because a lot of the times you'll see people that are like, oh, super hype. Look at Trump's on this token. And then it tops off while everyone's still talking really highly of it, buying every dip along the way. And the reason it's dipping is because the actual team behind it is selling. That's it. Like it's just basic supply and demand economics. Um, so if it's dumping and it's making new lows, stay away from it. I don't care who's behind it. That's your indicator that there are more sellers than there are buyers. Um, Chainlink looks like it's put in its official new lower high here. This is legit. It's a lower high, which means if it fails to hold right here at 16 bucks, not great. But notice how it hasn't really held a support at all. It just dumped hard and remained low and has failed to get back into this range, which means the majority of cryptos suck. Like even a great crypto with if there's no more buyers, and it should be up here. But if it's not, that means there's less buyers than you would like. And why would you enter that? Doesn't mean that it didn't bottom right here at $10. And also, this is a very slow mover. Like it's boring. Like you're gonna sit here, XRP will pump way harder. Like look at the personality of this guy from its lows right here. Let's just assume you actually got lucky and bought at $7. Currently sitting up 137% in that same period of time, just on an XRP, right? Right around here, breakout. So I'm doing the exact same comparison, to a degree. You'd be up 264%. Someone says Chainlink is better, and there are a lot of those people. Not for my portfolio. So again, very agnostic. And I like Chainlink. I think they're great as a company, but their token they need to work on. Which means tokens aren't always indicative of all the positive news you see, which is why Ripple's been working to buy companies, right? Versus just the token. They have too much token that they need to sell and not enough diversification, which is why they built RLUSD, which is why they bought G Treasury, which is why they bought, that prime broker, Hidden Road. Like, think about that for a second. Why are they doing that? That's important to know. So their shareholders are winning. We're still really early in crypto. Many people think it's a scam. Some of those people will always think it's a scam. Some people will pass every single opportunity because they value their own opinion more than they value just being open-minded. Um, but I will say this, I don't personally, Orange, I don't think we're early anymore. And that's my personal opinion, but I've been around it long enough. I don't think we're early. I think the majority of people who've heard about it have already tried their hand at it. We've got 60 plus million Americans in just Coinbase alone, and that's a lot of them, and a lot of money's in the United States. There's a global space. I think we're actually late to crypto investing. I think we're early to the adoption of blockchain technology at every sector, but that's not going to be value that just comes directly into all the cryptos you're buying. Most of those cryptos are still worth nothing, genuinely. And ultimately, all of the stuff that banks can now do using stable coins and regulation, they'll do on the back end, and people will benefit, and it'll be far more efficient, effective, cheaper, transparent. But you know what? None of that value actually has to come to us in the form of a token. Just throwing that out there. So like the real innovation is blockchain for sure. The real innovation was stable coins and the value that they provide. Crypto itself, the majority are actually crap. And the value doesn't need to go into your wallet in order for blockchain to still be used. It's no different than AWS. AWS is such, and we saw the outage the other day, massive, right? We're talking these data centers. Guess what? Do they need to share that value with us? They didn't need to toss a token out there, call it AWS token. They could have, and a lot of people would have bought it. Amazon's behind it. But like, where's the value for us in revenues and sharing in that? And at the end of the day, you have to understand a lot of these ecosystems will remain closed. Banks are still going to want to keep the majority of their profits, right? So I'm not saying that isn't revolutionizing the way banking is done. I am saying we need some regulation, but no, most of these tokens are actual crap. So, and the majority of people have heard of all the stuff. I think the majority of people who are pro crypto have probably tossed a buck or two at it. And a lot of them have been wrecked to the point where they'll never enter again. And that's just how their minds work. They've been wrecked. Why get wrecked again? Fool me once, right? I like in the US, I don't think we're early. I think blockchain technology still needs to get adopted. That's my take now. But like, and you could ask anyone on the team, all of like our experts, Mo, Yoni. There's so many areas and ways you can make money. I'll put it this way: Are we early to any other things? The internet. Is anyone in the world early to the internet right now? Answer: No. The internet is now adopted at a global level. Does that not mean, though, that you can't find a creative way to use the internet and take advantage of it to make your millions? Does that make sense? Yes, of course you can. And as the internet grows and expands, or there's new opportunities, you can take advantage of certain opportunities in the internet in the same way you can take advantage of certain opportunities in crypto when you learn the skill sets. But what, like, there's too much money in this market for you not to make money. The question is, are you going to work it right? And I hope that like maybe that changes the way that you think. You don't have to think how I think, but from just an investing in a token perspective, we're late. Like it's never going to be the same again. That should have happened in 2018 to 2021. That was your cycle to just buy anything and make money and say we're early. Um, this is a fundamentally different market now. Friday CPI, we're expecting 4% or 0.4 on the month over month and 3.1%. I think I would just watch this closely. I don't know what to think on this. Uh, on my birthday, I'll be 33 here, guys. 24th, it'll be fun. Uh, if the market crashes, I won't be having a bad birthday. I can assure you that. But I don't think it's going to crash if this is expectations. So if, for example, we see a 3.1% reading, because this is the expectation, everyone kind of knows that already. Then I think, and the market remains kind of flat or sells off just a little, not like a lot. That's fine, because what that's going to do is give the Fed a reason to drop rates another 25 basis points. And again, you have to remember we're already in new all-time high territory, or high territory, I should say, looking at the S&P. So in high territory, what's our percentage down right now? Not even 1%. Okay. I think in this situation and scenario, another rate cut is actually just going to be bullish for people. Like, I don't think there's enough insolvency in the market or a lack of cash or capital sitting on the sidelines to go buy more, or even people willing to borrow to buy more into these highs. So for that reason, I think even with a reading of a higher reading of inflation, let's say we get a 3.2, just watch the market. Does it dump hard on that, or kind of just barely? If it's just barely, then that's an indicator that into the cut, you're probably going to for sure get a rate cut. And that's going to be positive for the market. So any dip might be good for buying. Okay. I would be more so curious to see what occurs, not necessarily in the S&P or the TradFi markets, but what happens with Bitcoin in that. Does Bitcoin dump hard or not? And so I don't have an opinion on it. Yeah, let's see here. I just want to watch it closely. Thanks, Cliff. My son will be 33. It's Troy. Nice. That's funny. Born same year. Okay. Uh, I think we're good, guys. I answered most of your guys' questions. Very simple, straightforward. I hope this video or call today was helpful. Maybe next week we can dive into some indicators if you guys want to cover them, or different cryptos. But I appreciate your guys' time, and happy trading and investing. Just play good risk management this upcoming week. Watch that $107,000 level on Bitcoin really well and closely. I think that's a key level that it needs to hold. And if it doesn't, this might have actually been the top for the year. And while everyone's saying it's not, that's how you'll know. It's like everyone's saying it's not, yet here's what the chart is showing me. If the chart is showing you something different than what everyone's talking about, trust the chart over people, is what I'm saying. So, and not even me. You don't need to trust me. Just watch the chart. You've learned the basics, the skill set. Watch the chart. Okay. So there you have it, folks. I hope you enjoyed that live call recording from October 21st. And if you want to watch these videos live, or better yet, join in on these calls live, then be sure to join Altcoin Pro by going to altcoinpro.com. You have nothing to lose and everything to gain. We have a 14-day money back guarantee if you're not 1000% excited about it and you're not able to take advantage of even just one of our 15-minute quick win DeFi yield farms, where you can put your crypto to work for you in a very safe manner, arguably earn more than the membership costs every single month. So everything else is a smooth and free ride. That said, when you join, you can actually hop into the classroom and you can see that there's live call recordings where you can actually watch our library of call recordings, not only from our monthly master classes, our expert events, but also the technical analysis Tuesdays, where if you have questions or you want to learn more about indicators, you can join in right here. And what's so great is that's not all you'll have. You'll have access to a professional team of DeFi analysts and researchers who are always updating courses and guides for our community, whether it comes to learning risk management, which altcoins to pick, what to do when your altcoins are down, how to master everything in DeFi, strategies and guides around taxes, building out the perfect portfolio using bots and Telegram and wallets and everything else in between. So whether you're taking advantage of a 15-minute play in altcoin picks, a 15-minute play in DeFi yield farms, a 15-minute play in airdrops, the value, the education, and arguably just these plays are endless. So if you want to take advantage of the crypto market to the best of your ability through the end of this bull market cycle, go ahead and check out altcoinpro.com. Thanks so much for watching this video, my friend. Be sure to subscribe to the channel, and I will see you next time. Goodbye.